Oh wow! Thanks a lot. I think I do apologize. I didn't, and I just happened to notice that there was a notification that said no sound, and that was my fault. So I do apologize for that. I am glad that someone did go on and mention that there. I didn't even see that. Hang on one second. But thanks again for letting me know that. Yeah, let me go on and once again, apologies on that. Let's go on and swing back. So I was mentioning here that on the S&Ps, bear with me. We'll touch over that real quickly. Thanks a lot. Appreciate it. Um, so on the S&Ps, what we're mentioning is that we had come down here and just taken out this, as we can see from this big move all the way back here. You can see how important this 23% was, the pullback. And we actually ventured even below that, obviously under the circumstances, you can see why that we saw that. But we did see a rebound back into this 29.75, which was an important level if you look at on the way down here. But obviously, like I said, this market was under some kind of pressure at the time. But we've since pulled back down here. Let me go on and try and recap everything rather quickly. Apologies on that. We talked about the gold market and how we did get above that 1529. That opened the door for us to move higher. You can see as we saw the pullback, we came back in this pullback, and we saw the market pair back, jump right back above here, was able to challenge above here. We've come back during the Asian and European session to test that 1529, just dipped just a hair bit below it. But once again, we've broken past this area, and certainly with the exponential moving averages, certainly opened the door for us to move a leg higher. As I mentioned, crude oil continues to stay rather weak. And to me, that was my thought, because when you saw all these European purchasing managers indexes and even the U.S. consumer confidence and other economic indicators rotating lower, that probably opens the door for us to go on and pare back even further here in crude oil. I'll try and recap quickly. Bund yields have moved lower, which is obviously higher prices in bunds, as are 10-year yields moving lower. So we're going to move into the news. I will touch on the cross rates quickly. So we did have the RBNZ, cash rate, the held rate steady, and many were looking for big movements out of the Kiwi. And we're referencing here on the Euro Kiwi. Look at this move that we had here on the Euro Kiwi. And you would have thought, and let me pull this even further back. Look, we would have thought that this may have been susceptible to a bigger move. Now, this stayed within our bias chart. And I was mentioning earlier when the audio was out, so apologies once again, is I always put my key bias chart support and resistance in the pink. It makes it stand out better because I have multiple screens, so I can quickly see if something's moving, like, whoa, wait a minute, the guppy's moving here towards the lower end, close to the bias chart support, or same thing here with the sterling versus the odd. Now, I did take a look here with the Kiwi versus the yen, and we stayed within this tight range here. You can see here we almost made it up here to the bias chart resistance, came up a little bit short on that. With that, we'll go on and jump into the news. When I came on, I was basically just talking about the strength of the dollar. It's starting to reassert itself. We are seeing the peso move higher. The peso now is at 1953. So I'll cover the analysis on that. I did do the analysis for the basic technical in Asia, but we'll go on and move into the news now. So the dollar in defense of his Trump impeachment inquiry and weak data way. Well, like I said, we're seeing the dollar actually push a little bit higher, closer to this range. So we'll see if we can get beyond that. And let me just go and quickly point out that range here. One moment. You can see here that we look on the 2-hour chart. You can see here, we're just testing the upper part of this range. It's 98.58. The lower part is 98.14. Now, our 98.33 held. There's our bias chart resist support yesterday. Although I thought going into the, we'll pull this back down here. We do have 110 strikes on the euro, so I would think that they would try and defend that. But obviously, this whole impeachment thing is pushing things a little bit. Although I think, once again, $5 billion 110 option expiring yesterday. So we'll see whether or not the dollar index can get much higher. But this is that zone we're talking about. So let's go on and jump back into the news. So the dollar stayed in Asia trade on Wednesday, but remained on the defensive end after the launch of a formal impeachment inquiry against President Trump, while the political uncertainty added to worries about the economy strained by the Sino-U.S. trade row. Following reports, Trump sought foreign help to smear Democratic presidential frontrunner Joe Biden. House Speaker Nancy Pelosi announced the House would initiate a formal inquiry, saying Trump appeared to have undermined national security and violated the U.S. Constitution. The dollar bounced slightly in Asia after falling U.S. trade overnight, following Pelosi's move, which was announced late on Tuesday. There's a bit of position unwinding in Asia. After all, the impeachment process could take months. Still, it's not good news for the dollar, said Koichi Kobayashi with Mitsubishi. The dollar ticked up 0.2 to 107.28 yen. The safe haven Swiss franc edged back to 98.66 franc per dollar. The euro, which was battered by the weak euro economic data earlier this week, inched down 0.2 to 110. The Trump promised on Tuesday to release a transcript of his phone call with Ukrainian President Volodymyr Zelensky amid reports he withheld nearly $400 million in U.S. aid to Ukraine as leverage to get Zelensky to launch a probe that would damage Biden. Although it's far from certain whether the inquiry will eventually lead to an impeachment, which needs two-thirds majority in the Republican-controlled Senate, increased political uncertainty is seen as a negative for the dollar. Some market players also suspected domestic political fights will consume Trump's political capital, making it harder for him to strike any compromise with China on trade and other issues. On Tuesday, Trump's rhetoric on China harsh once again as he delivered a stinging rebuke to Beijing's trade practices at the United Nations General Assembly, saying he would not accept a bad deal with the U.S.-China trade negotiations. China's top diplomat, Wang Ying, quickly hit back, saying Beijing would not be threatened on trade nor allow interference in affairs, including Hong Kong, while having no intention to play the Game of Thrones on the world stage. Trump's speech was full of sensitive words for China, trade practices, currencies, freedom of religion, and so on. So it's hard to imagine it will irritate China, said Daisuke Udo. In the past, China has reacted to U.S. pressure on trade by bringing down the yuan. It appears we are having that setting again. Chinese yuan was steady at 710.88 per dollar in onshore trade. The dollar was undermined by data showing U.S. consumer confidence fell by the most in 9 months in September. Hence my thought about oil, and oil actually is on its lows right now because, like I said, look, we're seeing poor data across the globe. And here in the States, how the heck is oil supposed to hold up at these levels, especially when the Saudis supposedly is supposed to be fully online within 2 weeks? So we're seeing the crude oils continue to move lower. Net consumer confidence plunged in September, which counts with a big surprise that may sidetrack the economic expansion in relying on consumer spending to fuel growth, says Chris Rupke. Elsewhere, the British pound found some support after the UK Supreme Court ruled that Prime Minister Boris Johnson's decision to suspend Parliament for the first 5 weeks was unlawful in a further blow. And the New Zealand dollar edged up on the RBNZ, holding rates steady. Let's just quickly look at the morning bid. There's trouble at the White House at number 10 Downing Street, rising pressure on the U.S. Hang on. Turn that thing off. As Democrats are starting impeachment proceedings against Trump over allegations he attempted to influence Ukraine to smear a possible 2020 election opponent. We already went over that. I don't want to spend much time. The issue to financial markets now is whether the development materially changes existing assumptions about the course of the Trump presidency and the probability of a negotiated Brexit deal. Wall Street's S&P index fell almost 1%. Tuesday, mainly on flat overnight. Similarly, 10-year yields slipped back to about 1.62%. UK sterling rose about 0.5% after the Supreme Court ruling on Tuesday. The assumption is that the decision undermines the prospect of a no-deal Brexit on October 31st, giving Parliament more time to tie Johnson's hands should he attempt to face down new legislation and demand to seek an extension of the Brexit deadline. Let's see. I don't want to spend any more time on that. Let's see. So that's about it. Let's just go on and move on to the news at hand. So let's go and take a look at the euro here. And I did the analysis in the basic technical in Asia coming in. So I'm just going to go over that because that's still applicable. And let's go and pull up the WASH chart. So it says the euro has climbed above 110, working off at an oversold technical picture. Initial resistance is 1033, followed by 1075. Support remains at 1066. Well, folks, there's no changes. There's no changes, whatsoever. Here's the pivot at 1033. We've talked about that pivot before, and which comes in right. Well, you can see it on the 2-hour chart, but it comes in right there. And we still have this downtrend line, but 1075 is going to keep this market in check. And 965, we'll call it, it's basically 966. It's 965.9 or something. But that's going to remain the same. No changes here. But the euro is going to trade on either side of 110. We'll go and move into the cable. And you see we're just kind of trapped in a very tight range here with cable. So it says cable continues to defend the week's initial support, which was 24.2022, and it's still right now we're 24.48. Resistance for Wednesday is 25.36. Overall, the technical picture remains bullish, but this pair has to deal with Brexit tape bombs. So on the upside, we're looking for 25.36 if we can make that push. And on the downside, if they took out 24.24, we're looking at 23.73. But for right now, they're still holding that 24.24. And we'll take a look at it on the 2-hour, just give you a better look-see on that. So 24.24, it's holding right now. So if we were to bop up a little bit higher, we're looking right there at 25.36. We're trying to push it, but we're kind of rolling back south again. And right now, 24.24 is still holding. I'll tell you what, just in case we do slide, because we did make a little hiccup and we're trying to roll over. If we can get a little bit of momentum, we goose the stops, we'll go on and keep that 23.73 that we had from yesterday. But this market is certainly still bullish. Let's go on and move into the Aussie dollar. So it says the Aussie found some bids just ahead of the support level of 67.40. Right now we're actually 67.28. Resistance is a major level of 68.31, followed by 68.65. So you can see here this Aussie. I mean, it had the RBNZ. They had a little bit of steadiness. It looked like we might be able to push a little bit higher towards the 68.31, but we're rolling back, and we had defended this 67.40, but we're paring back. I mean, we're 67.82 now. Let's go and take a look at it on a 2-hour. So here's that 67.42, and we had a mark on the daily at 67.40. But we're saying, hey, look, we found some bids ahead of that support level. This over here. But we certainly couldn't get any kind of a follow through on this upside. So support's going to remain the same. I will actually just mark it on the daily. We have it marked to 67.40. Let's take a look here. We actually put it at 67.34, which is not bad. So let's just keep that 34. On the upside, we had 68.31, but boy, this market is really having a tough time trying to get anything beyond this 68 cents. But we'll go on and keep that 68.31 if things turn around. It's not going to turn around today. It wouldn't seem likely, but we'll see. But that would be what you'd be looking at actually on the 2-hour. There you go, 68.34. So let's go and move into the Kiwi. And we'll remain on the 2-hour. Well, peeps had a lot of, thoughts that this thing was really going to take off. And we just didn't see it. And I can see why they would have thought that, because look at this. This thing has just been going down, 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 down. And after the surprise extent of the cut, the previous central bank meeting, they thought, well, holding steady, we'd probably see some, fireworks. And we simply didn't see any fireworks at all, really, to think of, to mention. We're going and notate here. It said the Kiwi's firming up ahead of the RBNZ because this analysis was done ahead of the it was done in the early Asian session. Most are expecting the central bank to not cut. Resistance is a major level of 63.89. Folks, we didn't even come anywhere close to that. Now, of course, I'm looking at it on a 2-hour, so you can see that 63.89 more evident on the daily. But you can see here, I moved to the 2-hour because, boy, if you looked at the daily, it doesn't look like it would have moved it much at all. But it says resistance 63.89 followed by 64.36. Support is 62.55. Well, that's been that key level that's been, and a huge weekly level here. In the short haul, if we can hold, we'll go in, and I hate to put it that close, 62.87. That's not even very far. So what we're going to do is just going to move to here. Tell you what, right there. Because if it gets past, and that's not even that far, 62.30, okay. If it gets past 62.90, it's going to open the door for them to challenge back lower here. So this is where we're going to have it at 62.90. But if they get past that, it's going to be bad news, because they'll be challenging 62.55, and that'll probably easily end up getting cracked. On the upside, resistance for now is going to be, here's got that 63.60. Let's keep right here in case they're able to goose the stops a bit. We'll go with 63.70. But this thing's still in a lot of trouble. Let's go and take a look at the dollar CAD. I think this was going to be easier also to look at this on a 2-hour chart. Dollar CAD is testing the downside of its recent range. The support is 32.24. You can see that right there, 32.24. A daily break below 32 even opens a challenge to 31. So we'd be down here. So if we get a close right there, down here, it's really going to allow this market to accelerate down to 31 here. Bulls need a daily close above 33.36 to see further upside. Look, our resistance, we had that since even before the FOMC, which has been this 33.07, which has really held this market. But even if we get above that, that's just goosing some stops. We need a daily close above 33.36. So this 33.36, we just got to go and keep it. And we're in a range, and the bottom is 32.24. And there's a 32.24. So no changes there, but at least you can see where we're at right in here. With that, we'll go and move into the peso. Well, looky here. We finally got above 1950, and I'll go back to the analysis that was done in Asia. It says the dollar peso is stuck in neutral for the time being. Bulls need a daily close above 1960 to generate upside momentum. A sustained break below support level of 1940 places bullish case in jeopardy, with the breakout level 1923.6 in jeopardy. This is why I've kept this market on the bullish side, because you can see the importance of this 1923.6. And we finally got above it. And we did hold the 61%. That's the last bastion of hope. It was necessary for this to hold that. But with that said, we didn't see much of a move higher. So for support, today, it's going to be 1940, although it looks like we're in good shape of that not being taken out. But we'll go and move this up right there at 1940. That looks like that's going to be hold here. I'll actually move that a little bit higher now. And there's that one area which we've been looking for before. It's going to be at 1942. And what we've been using for our initial support right here is just they got to get past 1956. That's been our resistance. But we need a daily close above 1960 to really get this thing cooking. So we have held here. So 1956, yeah, that's going to be important. They may even pull back. But this is your real resistance. So we may be able to goose some stops, but until they can get above 1960, it's going to be all for naught. So let's go with 1960 on the upside because they really need to get beyond that. We've had that 1956. I think that will allow a pause, but we need to get above 1960. That's the true resistance. And 1942, that's going to remain the same. With that, we'll go and move into the dollar yen. Now, I mentioned yesterday in the chat room this key level. Now, our bias chart resistance has been 712, which is on the daily, but you can see the importance of the 709. We did dip a little bit below, but we've actually moved back up above it. So on the dollar yen, says the dollar yen challenged the buy support level of 712. The pair is holding for now, but a move to 591 appears likely over the medium term. Resistance is 773. So if we still continue to see weakness in the equities, we're going to have that safe haven move into the yen, and that would allow us to go on and move down here towards this 591, which is going to be way the heck down here. So resistance is going to be 773. That might even seem like a stretch at this point, but we'll take a look here. It comes in right. I'll actually move it 770. But like I said, you can even see here, even to get past 751 is going to be a little bit tough. But we are a little bit oversold, so things kind of calm down a bit. At least you know where your risk level is. So we'll call it 769. Let's call it 769. Now, when you look at this overall, it's still in a bullish mode. I mean, no, it looks like it's going to rotate lower, but until we get a daily close below this, that would turn it to negative. We could say, okay, it's negative, but right now it's still holding up. I've got to give it the bullish bent. Although generally we look at things on a more shorter time frame, so you'd say, hey, this is bearish, but we are below here. Let's see what happens. Don't want to flip this into, but technically, I guess on a short haul basis, obviously it's bearish. This will go in and change that over. I mean, if you look on a daily, we'd say it's still bullish, but let's change that here. There you go. Support. For right now, we'll go with that 693 for support. There you go, 693. Let's go move into the cash dollar index. Yeah, we just talked about this zone here, upper zone. You can see it being turned around just gently at this time. So since the dollar index is finding sellers as Washington woes are on on the overhang of Washington woes. China impasse and weaker consumer confidence take their toll. The pair has held 98.33, but still expect the test of the lower zone of 98.14 to be challenged before the week is finished. Resistance is 98.60. That's what I had in the Asian session. So you can see here that 98.58 is actually held it. So we'll go here with 98.60, which is what we said it was going to be. And on the downside, we're going to open it up a little bit and go for that 98.14. The 98.33 held, but in the potential that we move lower. We'll see how this all develops. We'll go and move into the cross rates now. Well, we didn't see that big of a move here in the aftermath of the RBNZ, keeping rates steady. So for now, what we'll do is just going to move this a little bit higher. You can see right there across these touches, and this will stay the same. So let's grab the bias chart. So the upside is going to remain the same, 68.22. The only thing is that the downside will move up to 67.58. And let's go move into the euro yen. We're testing the lower end here, and the euro is under some pressure, but you know, I think we're going to be able to keep this area here. So we're going to stick with this, which actually it's not even going to be a change then if you look at here. On the downside, we had 1786. That's actually held up all right, you know. We're up about, what, 27 pips off of that. And the upside of 1874, if they're able to get this, and we may see the euro strengthen a bit as we get in towards the end of the week, but we shall see. So that's going to remain still bearish, but that is going to remain the same. Let's go move into the euro odd. Relatively quiet here. Euro odd, we had 62.77. That's going to remain the same. On the downside, we had 62 even. Well, we did test and go beyond that. Let's go and pick up this. Right there. See all this volume coming in right there? It's going to be 61.51. And let's go to the Euro Kiwi. We got just past the 38%. Certainly not the fireworks that, and we actually held okay. I mean, we took it out a little bit, but not that much further. Support's going to be right there at that level, 72.97. 72.97. Let's push this just a hair below right there, but it's going to be 72.97. Oh, there it was, the 72.97 we had yesterday. If we took that out. And on the upside, just going to move this to right there. $74.72. And this is still bearish. It's had one heck of a move. Look at that. Let's go into the ASEAN. Boy, this thing's really been gotten very quiet itself. But the support is going to remain the same. But potentially this can drag even lower. So that is going to remain the same here. You can see that coming in what? 72.25. Well, we've got 72.26. That's fine there. And on the upside, we'll go and keep this here, which is going to be 73.48. No changes. Let's go and move on to the guppy. Pretty tight range here in the guppy. Actually, it's not holding too bad. But this is going to remain the same. We're going to keep the same levels right here. You can see it right here. So holding up fairly well. So looking at here with the guppy, 33.13 with 34.48, and let's get a little bit closer. You can see right here. You see 33.13. It's going to remain the same. We'll probably challenge that 33.13. We may even push the stops a bit further with starting. So let's go right there. Let's call it 32.71. Let's give it some room. 32.71. You can see right there. Got some nice volume coming across the highs here. Then we get up, we come back, test it for the lows here, come back in. We go below it and come right back above it. So I like that there. Let's go into the sterling on. Boy, this is relatively quiet. Look at that. Very tight ranges, and that's going to remain the same here in the sterling on. 84.20 on the upside, seems to have capped it, and on the downside, 82.64. So just fine there. We'll go and take a look here at the gold market. This is on the 2-hour chart, and you can see here that we broke that trend line. And not only we broke the trend line, obviously we got before we even broke the trend line, you see we generated a buy signal on the exponential moving average. We came back down to test the trend line, and from there's been up and away. We talked about the significance of this 1529, and if we were to get above it, that opened the door for another leg, and it looks like that's certainly coming to fruition. It looked like we might have gone a little bit weaker as we saw the volatility from yesterday come back. And we had a hanging man, and I thought this thing might even be pressured a little bit more. I thought we might hopefully get down to 1521. I thought it was going to be an excellent place. I was trying to pick it up there, 1521. But it held the 1524 on the downside. You can see right there, and then jump right back up, and then we've kind of slid back here. And we're kind of still pushing up, but that does still open us up for a leg higher. They've tested that 1529, but they're still defending it, and that opens an opportunity for us to move up towards this 1544. We shall see. Equities continue to remain under a lot of pressure. You have to think about where we're at. It's not like as if I was telling someone, people in the chat room, it's not like as if we're at 2,600. We're up here in the frickin' nosebleed seats, okay? So just on general risk, we could surely be able, and I thought potentially we could have come down to 29.42 yesterday. But there's a door open. Look, the 38% of this move takes us down to 29.27. So we still have some more room to move lower. And you can see here we got a bit of a rebound. I've turned around, rotate low, and we're back towards these lows again. And it's just a matter of how much uncertainty and also some other concerns is that not only has we seen the weakness in the economy, across the globe, but it's starting to impact here, is obviously if Trump's in trouble, that makes it difficult for him to be able to negotiate with China. At least that's the take. So that puts further weakness in equities. And crude oil continues to move lower here. You can see that. It makes sense with same thing, general economic weakness across the globe. What the heck would be crude be doing up at this level, especially with the idea that Aramco will be supposedly, whether it's true or not, fully up online within 2 weeks. Well, then we have the big jump. So if we're back fully up online, then probably bodes for us to move down towards this $55 area here. And we've seen this market just continue to drift lower. Well, that's all we've got for today. Thanks for joining us here on the European crossover. We'll see you in the FX Daily Roundup.